June 26, 2014, current time 10:26 GMT. Jay Marsler here with Daily Forex Trading Outlook. Now, we have a market where the dollar, for the most part, is softer today, except versus the euro. So the euro has been the underperformer. Commodity currencies, the firm sterling's back above 170, and dollar yen is trapped between that 101.60 to 102 level. Now, I'm going to go do a bunch of currencies today. I'm going to do sterling, I'm going to do yen, and I'll do the euro. So let's start out with the yen, because that's interesting. And this comes in a day before I even start, where the focus is now going to shift to U.S. Data. We have weekly jobless claims, and more important is the personal consumption and income indicators. The PCE, as it's called, is the preferred inflation indicator for the Fed. It's forecast to rise to 1.8% year on year, the deflator. So that any miss on either side could see a market reaction. That is a key indicator to watch, and it'll be a test of whether the dollar has any legs, because after yesterday's GDP, it's basically trading softer. Now, as far as the yen goes, yen's very interesting. It broke a 10-day pattern around 102 yesterday. And now, why is that 102 important? It traded at 10 days in a row. Typically, when you break a pattern like that, it leads to a directional move. By directional move, I mean a move in the direction of the break. It didn't test 102, so it should test the downside. So far, it's been a very limited reaction, and maybe you can see why. Look at these. Over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 3 weeks, this 101.58 or 60 level, say make it 60-ish, has contained the bottom. We have some momentum to the downside, but not a lot, and we're kind of now trapped in that 101.60 to 102 range. If 106.60 gets broken, then you get around 101.40, and then the major level here below 101, around 100.78 or so. So this is not a this comes to the market which is still basically bearish on the yen, but been frustrated this year. The dollar yen has gone lower and not higher. So for today, we're still in that range. Market's trying to buy against this 101, say 55 to 60 level. You don't want to see it below 101.50. So let's say 101.40 to 60 is support. Right now, resistance seems to be around 101.90 to the figure. So that's your yen range. Very tight overnight as it was yesterday. And seems dependent again on how U.S. stocks trade. But that's dollar yen in a nutshell. A range, but technicals are tilted slightly to the downside, which runs contrary to what everybody's hoping for in the end. Now, as far as the pound goes, the pound is above 170. The recent high is 170.63. The breakout level is 170.43, which didn't hold. So let's say let's make in sterling 170.50 is probably where it has to establish above to suggest 170 is now a floor as opposed to just one of these pivotal levels. We've been up in this area several times. We have not held. So, the key is whether 170 becomes support. So just have to watch that 170.50 level. Markup may sell against that. Once say 170.43 to 63 is really the level in sterling. Selling in the upper ranges has worked, but the trend is still pointed up. And I guess this area here, which is right around 167, is the area that would have to hold. Now, what I like to do is I like to look at indicators that are best tracking the move. And right here, this green line is the 100-day moving average. So if you're looking for an indicator that would turn sterling down, it's this 100-day moving average. And of course, this level of support here. So as long as we're above the 100-day, the market will probably look to buy dips. If, of course, the 20-day has an influence also. But longer range, I would look this 100-day moving average. Keep it on your chart. That seems to be tracking it. You see here, slight break here, but basically it's been above this for quite some time. So that's your indicator going forward in sterling. But of course, 170 is going to set its tone. Now we go quickly to the euro dollar, which yesterday Those who follow me know the 50 level is very important in everything I do. Eurodollar did hit a wall at 170, 136.50, but there was a 5-day pattern coming into today around 136. 136 is so far not printed. If it does, that will neutralize the effect, similar to the yen when these patterns are broken, and 136 is not as important as 102, but it tends to have a directional move. So the euro dollar finds some support while it's above 136, but below 136.50, it's kind of trapped. So similar to yen, 101.50 to 102, euro dollar currently 136 to 136.50, but only above the 136.75 level would break the range, which is down to 135.03. If you look at the 4-hour chart, yesterday we broke above this right here, the 200 period moving average in the 4-hour chart. It didn't hold. Look at the 100 period moving average. It's kind of like a flat line. So we're going to quickly go to the 1-hour chart. And the 1-hour chart, similar to the 100-hour moving average is kind of like a flat line. But I would use that initially to watch. It comes in around here, around 136.06 or so. I would use this as an initial level of support. And once again, you now have the 200-hour moving average, and it's kind of held above here. Didn't come close here. That would be your level on the downside that would have to get broken for, and it comes in right now really around 135.90, which I believe is pretty close to the 20-day moving average. That would be your key level on the downside that has to hold to keep your dollar bid. So your dollar 136 is very important today. Only if it doesn't print. If it doesn't trade there, it would be supportive. If it trades, it just confirms when the 135.50 to 136 level. So you got to watch U.S. data today. It's very important. And I also, as you know, I like to we write these articles almost every day. This one's really good. Adapt and thrive, or be stubborn and die. Little graphic, but if you click on it, you'll see why you should read it. In this kind of market, you really have to adapt, and this gives you an idea why. So I would strongly suggest it. It's clickable. Just click on this link right here, and you will see the article. Otherwise, that's it. Wait for U.S. data. How the dollar reacts to the data is more important than anything else. We have month end coming up and quarter end, so that could be an influence on trading. With flows will be more important than say spec flows as people wind down for the quarter. We have the World Cup at 15:30 GMT, so market's going to get quiet around lunchtime, about the close of business in Europe. But as I said, click on this article, watch U.S. data. That's the market for today. Good luck and good trading.